Remember when we were all young and naive and thought that the bottom was already put in? Remember when we thought that the trade war would blow over? Remember when we thought that there would be a bullish V-shaped recovery that historians would write about? Well, apparently we were all pretty freaking wrong, because right now the bears are in control of the driver's seat and it is looking pretty brutal. In fact, we were this close, as I'm about to show you, of once again officially entering a bear market. This is a no bueno situation, and why it's happening? Well, the TLDR is that the uncertainties related to the trade war are once again hitting new heights, but this time around, there's a little bit of gas being added to the fire because there's a lot of uncertainty within the US. Mommy and daddy are fighting, and I'm talking about Trump and the chairman of the Fed, Powell, and it looks like it's gonna be a very messy divorce. In this video, I'll be breaking down the most recent news related to the trade war, but I also wanna dive into the drama related to both Trump and Powell because it is getting extraordinarily messy. And of course, I'll be giving you my own thoughts and opinions, but most importantly, my price predictions of where I see the overall market going in the short term. But like I said, this is a brutal, bloody Monday type of a situation, so we got a lot to chat about. Before we do that, if you haven't already, don't forget to like, subscribe, and let me know in a comment below if you enjoyed these type of daily updates. And with all that being said, let's rock. By the time the world's largest casino went dingity ding 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 on the day and officially closed, here was the headline. Dow slides more than 950 points as Trump rips Fed Chair Powell, reigniting investor worries. So here's a look at the daily chart of the S&P 500. Generally, we don't take this large of a step back, but I think it is really important because obviously you can see from the all-time high, we're down pretty low. And from that high to this exact point, we're down 16.1%. At the extreme today, we were down 17. So remember, 20% drawdown is the bear market. So you might be thinking, hey man, we're close, but obviously we still have some room to go. And you'd be right, but take a look at the NASDAQ 100. On the screen right now, NASDAQ from the all-time high to right now, we are down 19.9%, as in we are a sliver away from officially being in a bear market. And at one point today, we were officially in a bear market, down 20.8%. So yes, tech is getting absolutely hammered. Now, quickly, let me go back to the overall market, S&P 500. I think it's really important to point out that the range created on Wednesday, April the 9th, which is the day when we found out that yes, the tariffs on China would go up to 145 and there's a 90-day pause bringing everyone else back down to 10%. Well, we're still within that range. We have not broken that high. We have not broken that low. So right now you could argue we're in some weird pending consolidation period. And I think this is important to understand that bigger picture. Obviously, a break to the upside would set up the upside gap fill, and a break downward would most likely put the overall market in an official bear market. Now, coming back to today's action, here's what happened. We had a gap down. We did not hit the previous session, aka Thursday's low or close. We basically gapped down and puked and puked and puked. There was a little bit of a reprieve during lunch, and then a puke, and then a little bit of a push to the upside, giving some bulls a glimmer of hope, but I don't think that this is going to be lasting for any time whatsoever. So basically a puke, a pause, another puke, and then what I predict is going to be a little bit of a fake out push to the upside, but obviously tomorrow will tell. Granted, we're talking about the overall market, but trust me, this was a brutal, bloody Monday. Here's a look at the heat map of the S&P 500. Red everywhere. The only thing that looked to be green was really Netflix, and that's because it had really good earnings after the market closed on Thursday. Now, to look at a couple others here, you could see the SPY dropping 2.4%, the NASDAQ dropping almost 2.5%, Tesla getting beat up. In fact, there's a lot of red. The only thing that I actually saw that was decently green beyond gold and volatility was actually digital gold, Bitcoin. Bitcoin doing pretty good today. Coinbase, obviously highly correlated, looking pretty good. MicroStrategy looking decent, highly correlated. But we are seeing an interesting change of trend, a change of correlation. Generally, Bitcoin was highly correlated with the SPY and the NASDAQ. And in the month of April, we're seeing it break that trend and in fact, act as a little bit more of a safe haven asset. Now, is it going to last? I have no idea, but it's acting a little bit more like gold than it is the overall market. So why is this all happening? I think everything I just showed you painted a pretty good picture of the chaos, the uncertainty, the downright market insanity that's currently playing out in the world's largest casino. But the question is, what in the short term, like what right now is the big news driving it? And you don't have to search that far. Trump upping pressure on Powell again calls for rate cuts. As I said before, we're seeing a big fight right now in real time playing out between Trump and Powell. Trump's push against Powell adds to doubts of US's haven status, as in the dollar's getting murked. US dollar falls to a 3-year low as Trump's Powell threats further dent investor confidence. The dollar is really dropping. You can check that out with the dollar index, DXY. But what's really scary is the USD JPY pairing, which also is diving off a cliff, because if that blows up, well, then the yen carry trade blows up. And if you want to know what happens when that occurs, well, look at August of last year, where the market definitely went haywire. But anyway, bringing it back to this Powell issue, Trump ramps up attacks on Powell, demands loser Fed chair lowers rates now. That is from today. Literally just saying, you gotta lower it, you're a loser, and we could fire you. And this has been about a full week of the onslaught. So it all started last week. The ECB is expected to cut interest rates for the 7th time, and yet too late. Jerome Powell of the Fed, who is always too late and wrong, yesterday issued a report which was another and typical complete mess. So that was Thursday of last week. Then the very next day, Friday, Trump renews call for interest rate cut, says rates would be lower if Fed Chair Powell understood what he was doing. And this was the exact quote: "If we had a Fed Chair that understood what he was doing, interest rates would be coming down too." And then that all led us to today, where Trump held nothing back. This was his post from Truth Social. Preemptive cuts in interest rates are being called for by many. With energy costs way down, food prices substantially lower, and many other things trending down, there's virtually no inflation. With these costs trending so nicely downward, just what I predicted they would do, there can almost be no inflation, but there can be slowing of the economy unless Mr. Too Late, a major loser, lowers interest rates now. Europe has already lowered 7 times. Powell has always been too late, except when it came to the election period, when he lowered in order to help sleepy Joe Biden, later Kamala, get elected. How did that work out? Now, I'm not really here to tell you who is right or who is wrong, but I am here to tell you that this is more gasoline on the fire, adding to uncertainty. It would not be good at all if Powell ends up randomly stepping down, if he gets fired. Right now, we are in a big mess, especially when you have the chairman of the Fed, Powell, at odds with, obviously, the president of the United States, Trump. And for those of you who are wondering how bad is bad, well, we're seeing the dollar diving, we're seeing the US dollar JPY pair diving, we're seeing bonds going down, we're seeing yields going up, we're seeing oil going down, we're seeing gold going up, we're seeing stocks absolutely vomit, but now finally we're seeing Bitcoin stabilize. The whole thing is a complete mess, and obviously this type of dramatic fight is making nothing easier to understand. But wait, there's more. Just when you thought that that's the extent of it, and insane can't get more insane, it absolutely can. China vows retaliation against countries that follow US calls to isolate Beijing. China has warned it will retaliate against countries that cooperate with the US in ways that compromise Beijing's interests. China firmly opposes any party reaching a deal at the expense of China's interests. If this happens, China will not accept it and will resolutely take reciprocal countermeasures. That was the breaking news as of this morning. Once again, no bueno. I think it's pretty clear, but I'll just say it for the record. It seems as if we're trending in pretty dangerous, unknown waters. Breakdown in US-China relations raises specter of new Cold War. What is at stake as economic ties careen off the rails is overall global security and economic stability for years to come. So what happens when you mix this all together, put it in a blender, and turn it on? Well, nothing good. The US will absolutely have a recession in 2025 if high tariffs stay. Now, I should take a quick break to say something pretty important. I know everything I just said sounds pretty doomsday, and yeah, I am a little bit biased. In the short term, I do have some bearish positions. But let me be clear about something. If you look at the overall theme of what's going on, it is bearish. All this uncertainty from the administration is not good for the market. If you look at what's going on in price structure, well, we have lower highs and lower lows, and we are getting very close to a bear market. If you look at price momentum, we're below all the major EMAs. And if you look at options, right now, it is all put dominated. It doesn't matter if you're looking at the 0DT, the entire week, or even at looking at the monthlies and the quarterlies. Everything right now is in control of the bears. But once again, that has a short to medium term type of an outlook. I want to be clear. In the long term, I do believe it pays to be a bull. In fact, I know all the odds say in the long term, it pays to be a bull. And that's exactly what I want to be clear about. In the short term, yes, I do believe the bears are in the driver's seat and they're going to be the ones who end up making money. But in the long term, I strongly believe all of this havoc will represent a dip buying opportunity. Obviously, just the golden question is when to buy the dip. I say this on the show all the time. Obviously, shameless plug, Monday to Friday, 9 to 11. I did generally trade my own accounts. Feel free to stop by wherever you're watching this. You can watch the live show. But anyway, as I always say there, Trading and investing are two completely different things, and they often get conflated because they are both playing out in the stock market. They're two different sports that end up being played on the same field, so people think that they're the same thing, but they're not. Trading and investing are wildly different. Right now, in terms of trading, short to medium term, clearly the bears are in control. But in the long term, with respect to investing, the bulls always win out. So if you're an investor, these are the opportunities where you load up on your favorite blue chip stocks. As a trader, it's where you gotta pay attention. And what you should pay attention to is, well, obviously all the major macroeconomic events. There's nothing really scheduled for Tuesday, April the 22nd. We have a couple Fed speakers, but that's about it. Later on this week, yes, we're going to get some PMI numbers, durable goods, and that's kind of it. We're going to get consumer sentiment on Friday. We are in earnings season after the market closes tomorrow, Tuesday. We're going to be hearing from Tesla earlier in the day. If you care about Verizon, Lockheed Martin. On Wednesday, we have Boeing, AT&T, Chipotle, IBM. Thursday, American Airlines, Southwest, Intel, Alphabet, also known as Google. And then close out the week, we have SLB and Phillips 66. Like I said, feel free to screenshot this or just go to @eWhispers on Twitter. But overall, we are seeing some interesting movement in just the general market and individual companies. Not that they have earnings. I do think this is important. Trump will host Walmart and Target and Home Depot execs for tariff meetings. So obviously, he's going to be explaining why he's doing what he's doing. And the execs from these three companies are going to be begging him to please stop because it's really going to start eating into the bottom line. But, and I don't definitively know this, I do have a sneaky suspicion that he's going to do what he's going to do. He's going to do whatever he wants until China agrees to exactly what his demands are, which I'm not even sure we know what his demands are, which is why the uncertainty of this overall situation is at peak levels. I don't know when you are or aren't watching this video. Obviously, I hope you're watching it in time for my upcoming prediction. And if you're watching it a little bit late, at least you're going to be able to find out if I was right or wrong. Today, the low was found at the previous low from Thursday the 10th, pretty much bouncing off the same level. That was also the key open interest level. I see the market going one of two ways and for various reasons. So obviously, if this support holds, if we see a lot of open interest come in here and then we take out today's high, Monday's high, I'm looking for the upside gap fill. That would be the entry and the exit. Now on the flip side, which I do believe is more likely, if we end up snapping 5,100, yes, there's that key technical and psychological level at 5,000. But what's interesting is there's actually a lot less action at 5,000 than there is at 5,100. As in, if we snap 5,100, I think we're going to puke all the way down to Wednesday, April 9th low at 4,948. And guess what's right below that? That's officially where the S&P 500 goes into a bear market. And then from there, we're basically going to hope that the market can save itself either at Monday or Tuesday's low. And obviously, if that were to occur, I'll do a whole nother breakdown and let you know what the options market is doing. But I do want you guys to know this for Tuesday, April the 22nd, for tomorrow, for my 0DTE traders. Like I said, I hope you're watching this in time. If 5,100 does not hold, the next big protective level is all the way at 4,650. That's the big protective puts that market participants have been selling today. There's not much in the way of stopping him. So clearly, I do think you should pay attention to the overnight action, but tomorrow before the market opens, I'll be doing the live stream and I'll break down exactly in real time where we see all the positioning in the options market. So obviously, I hope to see you there. That's what I have for you now. I hope you enjoyed the breakdown. Obviously, I appreciate you making it to this point in the video, and I appreciate all the good vibes. That's what I have for you. I'll catch you in the next one. Peace.